We want to get to one of the big movers this morning, and that is Delta. Shares on the move after the company reported its third quarter earnings. Now, the airline saw profits surge as strong travel demand continued throughout the summer, looking at gains of just about 3% in the pre-market. CEO Ed Bastian saying this morning that he expects the same trends to continue in the current quarter. Looking at the top line numbers for Q3, Delta's revenue coming in at $14.5 billion. That was in line with expectations. Adjusted earnings was a beat with $2.03 per share. Joining us now for these results, we want to bring in George Ferguson, Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst. George, it's great to see you there. So let's start with the numbers that we got out this morning. They topped estimates, but Delta did trim its profit outlook for the year. What's your first take on the numbers and some of the commentary that we're getting in this release?
Yeah, so thanks for having me. The first take, I guess, is the expenses are largely set. They recently did these pilot deals and labor deals that have increased their expenses. Fuel is going to be what it's going to be. And so I think the big variable as we go into the back part of the year is going to be revenue. It's going to be fares, right? And so when we look at 3Q earnings, it's a lot of what we expected, although there's a slowdown in U.S. domestic. I shouldn't say slowdown. There's a diminution in fares yields. They're down 5% in U.S. domestic. So that probably concerns us the most going forward because it feels like the U.S. consumer could be running out of gas. It's going to be their biggest market, right? The consumer is squeezed by higher interest rates, higher inflation. So we have to see how that domestic demand holds up. Transatlantic was really strong. Fares were up. Yields, we measure yields up sort of 9% across the Atlantic. We knew that. It was a strong summer season. It was a bounce back, after a pandemic had closed international markets for a number of years. Not sure you get that kind of bounce back next summer. Even as we go into 4Q and 1Q, I'm not sure business is ready to support that level of yields across the Atlantic. So again, I think those are the big variables at Delta we're going to watch pretty closely. We're concerned a little bit. There's a lot of leisure in here and corporate won't be able to support these kind of yields going forward.
So what you're describing, George, then is the expectation of normalization in some of the travel patterns then. So what does that spell out for some of the profit that we've seen grow over at Delta and for this company that was the first U.S. airline to get back towards profitability after the pandemic and after trying to bring capacity back online?
Yeah, I think it's going to be hard to maintain these high levels of profits because, as you said, as we normalize, as demand normalizes, we would expect that fares would have to come down to continue to fill airplanes as the consumer just doesn't pay whatever it takes to go somewhere. And yeah, so we're watching that pretty closely. And, again, we've got a consumer that's more squeezed than they have been after the pandemic, right? Interest rates are higher than they were even during the pandemic. To the extent the consumer has debt, that's costing them more. And then we've got inflation that's, essentially higher fuel prices, higher food prices, all these other things that are in the economy that are squeezing that consumer, again, higher than they saw during the pandemic. So as this normalization, happens, we don't think fares can stay this high because we just don't see this, again, pay it all to go on vacation trend.
George, how big of a decline are you expecting to see in fares?
So 5% actually surprised me a bit for domestic in 3Q. I would expect you could continue to see that kind of trend in 4Q and 1Q. So that's gonna take a pretty big bite out of revenue.
The SkyMiles program was one area that customers were, in some cases, infuriated by over the quarter. Was there any evidence that was a deterrent for purchases, for travel plans that were perhaps enacted, but even as we think towards some of the future bookings that the company is talking about?
Yeah, I can't tell that yet from the financial statements, but I do think it was telling that they reversed some of those changes. Ed Bastian came out and talked sort of directly about that. That's a really important program. $1.7 billion in remuneration during this quarter from American Express. So it seems like they may have went too far, and something, again, we'll have to watch.
George, when we talk about one of the other challenges here for Delta and many of the airlines, the war going on right now between Israel and Hamas, the fact that it could widen in the Middle East, what that looks like for the airlines. How big of a impact do you see this being, not only for Delta, but also for the other larger U.S. carriers that have suspended flights to Israel as well?
So right now, not a lot. It's a small portion of their businesses going into Israel, Middle East. If it widens, it could become a lot more of an issue. And then I think the fuel price is something we're watching as well, right? If problems in the Middle East widen, I think you'll see fuel prices and oil prices gap out, and that's going to be a problem too.
All right, George Ferguson, Bloomberg Intelligence senior analyst, senior aerospace, defense, and airlines analyst. George, go ahead and get in the office, man. We don't want to hold you outside for too much longer.
Thank you. Appreciate it. Cheers.